What's on the horizon for the Eurozone going forward?
Yeah, so as you know, I've been following the Eurozone for a long, long time, many decades, close to my heart. I cannot remember a time when it's been as much on fire as it is now. I mean, on fire means growth is 2.5%, which is about the same as we're likely to get in the US this year, but without the massive fiscal stimulus. So things are pretty good at the moment in the Eurozone. What's even more important is that all parts of the Eurozone are growing above trend. So this is very different from the past where you had these big growth divergences. Now the periphery is also doing much better. It's not only the core. Then inflation is still low, I would argue too low. It's kind of the missing link still for the ECB. Inflation is not really picking up. But I think the main reason for this is that the euro has appreciated a lot over the past year. The ECB is likely to exit from its bond purchase program this year, most likely by the end of the year. It might already end it in September. They will, of course, keep reinvesting maturing bonds for a long time, but they will not expand their balance sheet further beyond this year. But the good news is rate hikes are not a story for this year. Rate hikes are likely to be slow in coming. Most likely around the middle of next year, maybe even later. I think it's interesting that even the hawks on the ECB board, the ECB Governing Council, are not arguing for early rate hikes. So I think the low interest rate environment will stay in place for quite some time.
So Scott, what do we see in terms of catalysts, either positive or negative, that would change our view on periphery risk today?
Well, we think the main thing the markets might be sort of forgetting, or at least too quickly extrapolating from most recent experience, is that the impact that the ECB's had on reducing volatility in the market, compressing spreads, and lowering yields across Europe, that's going to fade pretty substantially pretty quickly in our view. So volatility picks up, but you also get more normal looking yield curves. I mean, certainly relative to fundamentals, there's a very big divergence with core Europe relative to these growth and inflation numbers way out of line with where it should be in equilibrium historically. So we think there's certainly a chance of a repricing, particularly as we get towards the end of this year and the ECB stops their purchase activity. Then also with respect to spreads, I mean, remember that we still have a pretty unsettled political situation in Europe. Obviously, we don't know the conclusion of really the Italian elections and where that takes us, but it is remarkable with this growth in populism and nationalism that's occurring at a time when growth is so good in Europe. So it does raise the specter that if you get a slowdown, if you get any sort of shock, without the support of the ECB there purchasing in every country, you could have an environment where you have yields expanding pretty quickly throughout the Eurozone between the core and the periphery. And don't forget, too, that I describe this expansion as it's pushed off the problems with the debt dynamic, but we're not yet in a stable situation with the debt dynamic under most reasonable scenarios for a lot of countries.